So, let's just tackle the big question head on. What is an exchange-traded fund? I know, it sounds kind of complicated, maybe a little intimidating, but I promise the idea behind it is actually incredibly simple and really, really powerful once you get it.
Okay, so here's the textbook answer. It's a fund, holds a bunch of assets, trades like a stock. You can buy and sell it just like a share of Apple or something. But you know what? Let's just throw out the official jargon for a minute. There's a much better way to think about this that'll make it click instantly.
Just think of it like a basket. Seriously, that's it. A basket of investments. Instead of you having to go to the financial supermarket and pick out every single stock one by one, you're just buying this one pre-made basket that's already filled with a whole bunch of different things.
And this really shows you the difference, right? If you buy a single stock, it's like buying just one apple. All your eggs, or, well, all your apples, are in one basket. Kind of risky. But with an ETF, you're buying the whole fruit basket in one go. You get the apples, the oranges, the bananas, the whole shebang.
And this brings us to the big magic word in investing, diversification. Think about it. If your one and only investment is that single apple and it turns out to be a bad apple, well, you've lost everything. But in our fruit basket, if one apple goes bad, who cares? You've still got all the other fruit. That's what an ETF does. It automatically spreads out your risk for you.
All right, the whole basket idea makes sense, right? It's a simple concept. But how does this actually work? Like in the real world? Let's look at a practical example to see how it all fits together.
The way they work is actually super simple. They trade on stock exchanges, like the New York Stock Exchange, just like any regular stock. You can literally log into your brokerage app, buy a share, and then, if you really wanted to, sell it 5 minutes later. As long as the market is open, you can trade them. And it's the ETF itself, the fund, that's actually holding all those tiny little pieces of the companies inside the basket.
Okay, to make this totally clear, let's use a huge, super popular example, an S&P 500 ETF. This is probably the most famous type of ETF out there, and it just perfectly shows you how powerful this whole idea is.
So, what is the S&P 500? Well, it's basically a list of the 500 biggest, most important companies in the US. We're talking the giants, Apple, Amazon, Microsoft, you name it, they're probably on the list. And an S&P 500 ETF is simply a basket that holds a piece of, you guessed it, all 500 of those companies. And this is where the magic really happens. With one single purchase, just one click to buy one share of an ETF like VOO, you become an instant part owner of all 500 of those top companies. At the same time, you don't have to research them all, you don't have to pick winners and losers, you just buy the whole basket.
Okay, so we know what they are, we know how they work. But now for the big question. Why should you care? I mean, why are these things so incredibly popular, especially for beginners? Well, let's count down the top 5 reasons.
Okay, first up, lower risk. We already talked about this. That instant diversification is a game changer. Second, the fees are ridiculously low, like tiny, so more of your money actually stays working for you. Third, you get to tap into some really solid long-term growth. Fourth, they're just easy. Seriously, beginner-friendly. The ETF does all the heavy lifting. And number 5, they are accessible to absolutely everyone.
And I really want to hammer that last point home. You do not need to be rich to start investing. Not anymore. A lot of platforms let you buy fractional shares, which just means you can buy a little slice of an ETF share. You can literally, and I mean literally, start building a fully diversified portfolio with $10. How cool is that?
So, the S&P 500 ETF is an amazing place to start for sure. But you should know that the world of ETFs is absolutely massive. There are thousands of different kinds of baskets out there, and each one is built for a different purpose, a different goal. So let's do a quick flyby of the main types. You've got your index ETFs, that's for overall growth, like the S&P 500 we talked about. Then you've got dividend ETFs, those are baskets of companies that actually pay you cash, like a little income stream. For safety, you might look at bond ETFs, and you can get really specific too with sector ETFs to only focus on, say, technology, or you can invest all over the world with international ETFs. Okay, I know. Seeing all those choices can feel like a lot. So here's the simple takeaway. For most beginners, honestly, just starting with a good, broad index ETF for growth and maybe adding a dividend ETF for some income later on, that's a brilliant time-tested strategy. You really can't go wrong there. All right, now for my favorite part, the really exciting stuff. We've covered the what and the how, but let's talk about the wow.
This is where we see how putting away just a little bit of money, consistently, can grow into something absolutely massive, all thanks to this magical force called compounding.
So let's imagine a really simple, totally doable scenario. Let's say you invest just $100 a month. That's it. You put it into an S&P 500 ETF. And we'll use a pretty standard historical average return of, say, 8% a year. So, what happens?
Okay, check this out. After just 5 years, that's over $7 grand. Pretty cool, but stick with it. After 10 years, you're looking at $18,000. 20 years in, almost $60,000. And this is where the growth really starts to take off. Look at 30 years, $140,000. And if you can keep this up for 40 years, that simple $100 a month could turn into over $350,000. That right there is the magic of compounding.
So let's just recap the big takeaways, all right? ETFs give you instant diversification. That's safety. The fees are super, super low. That means more money for you. They have amazing potential for long-term growth. And maybe the best part, they are just so simple and easy for anybody to get started with.
And that really brings us to the last question, which is really the only question that matters. Now you know what this tool is, so the question isn't what is an ETF anymore. The real question is, what are you going to build with it? What could your financial future look like if you just decided to start?